My name is Deanah, and today we're going to be going over the accounting mistakes that most common are often made in business. So I'm an alumni of the University of New Haven. I've been an accountant for about 19 years. Before I was an accountant, I worked in the restaurant business in the Fairfield and New York City metro area as a loss prevention specialist. Now I work for a small CPA firm in Brantford. So I'm a member of the Connecticut Society for CPAs, the AICPA, the New York Connecticut Association of Tax Preparers, and I'm also a member of the Association of Fraud Examiners. I'm also a member of the Shoreline Chamber of Commerce, and I'm on the board of directors for the Network of Executive Women in Milford. I enjoy helping small to micro business because I believe that as a community, we all have knowledge and mentoring to offer, and that's how we all succeed and prosper. So it's funny when people get into business, everyone's very excited, they have their vision, but sometimes people jump in and they don't do kind of like basic steps. So there's like 3 basic steps that you have to really kind of stop yourself and think about. You have to make sure you have goals, right? Because there's no sense of getting in business for yourself or doing something unless you have a goal. The goals can be small, like you want to make extra money to send your kids to school, or you want to save for a car, or your goal can be you want to be your own boss, you want to start franchising. It can be as small or as big as you want. You have to know what you want to do, and you have to have a vision because that's what's going to drive you. So you have to be determined. You also have to decide whether you want to do this full or part-time. And then you're also going to have to look at whether that's realistic for you to do it full or part-time, meaning could you support yourself on your own income? You have to also realize how much money is involved, and you have to be realistic about it and research it. You really need to know how much money you need for startup and supplies. You have to research because you need to know how much to charge. That's especially good for a service business, if you have a craft business, if you make t-shirts, or even if you're going to start your own electrical business or plumbing business. You have to know what fees to charge, because if you're going to charge, say, $120 an hour when all your competition is charging $85, you're not going to do that well. So you also have to make sure you have compliance, meaning that you have to make sure you have the right paperwork filed, the right licenses. Like, for instance, you couldn't open a hair salon if you're not a licensed cosmetologist. Certain checks you have to do, kind of checks and balances as you go along the way. So when you have your goals, you realize and you researched your capital and you're compliant, then you're kind of ready to be your own boss. And normally that would say, when you tell a client we need a business plan, it scares them because they have this vision in their head of this 15-page thing that you have to write. It's not so much anything written as much as it's in your mind or on a piece of paper. You realize, and you did these 3 steps. You research what you have to do, you research your competition, and you're ready, right? So then you're ready to be your own boss. But SARD also is getting the right help. So there's many resources, as we know, for small business. Sammy knows this a lot. There's tons of community networks, and there's civic centers and classes. A lot of towns have classes on how to do things. Also, when it comes to doing taxes in small business, there's something called VITA, which is a free tax clinic. There's also tax clinics for abused women and women, especially at the Quinnipiac University School of Law. It's an excellent program. The woman who runs it was trained by Eric Green. There's also free webinars and videos on the IRS YouTube channel. Yes, IRS has a YouTube channel. I'm sure it's not that much, but they have one.
And also, Deanah, the library, we have VITA at the library.
So see, it's perfect. So you're already halfway there with getting compliance. And anyone who does the VITA, they are trained. So the IRS trains them. You just can't volunteer to do that. So they're a trained preparer.
Okay.
Important thing to get through is you need a partner in business that you can collaborate with. Especially if you do BNI groups, they always talk about spheres, but at any time in networking, they talk about spheres. It's so much what they say, it's not what you know, it's who you know. So you need someone that either is going to be able to mentor you, or even someone in another trade or another business that you can bounce ideas off of and say, I'm thinking about doing this. Because sometimes you have an idea in your head and it sounds really great, and you run it by someone else and they kind of ground you a little bit. And also, especially, you need someone that's mentoring you that you can talk to when you have a problem, because being your own boss and being in business for yourself is very difficult. You wear many hats and you don't just work. So a lot of us, especially if we're women or for men and we are single dads, they're single moms, you have kids in school, now we're all homeschooling, right? You might be in college or finishing your education yourself. You have a home to take care of, you have laundry, there's a family, there's church, there's your community service, your whole life is filled, right? So it's not just easy. It's a lot of dividing and conquering your time. So when you have that person that you can bounce ideas off of, or even someone you could just talk to about business that you're comfortable with and what you want to do, they'll give you the support that you need. And business of yourself is a lot of hard work, but a lot of the hard work is getting the right support and using the right people to help you along the way. That person really should share the common vision with you, meaning that you don't want to say, for instance, let's sub shop up the shop that's your competition to be your mentor. You kind of want to get someone that you're comfortable with talking to, that wants to raise you up and not so much, hold you back. So that's another really important aspect of getting into business and getting the right mindset. When you have the right mindset for business, everything else kind of falls into place naturally. And it's almost like a series of steps. If you imagine walking up steps, it's one step at a time. And the only problem is with business, when you're in business for yourself, the steps almost go like an escalator at one point, out of control at 100 miles an hour. And it's really easy for you to lose track of what's going on and what your purpose is. So if you always have that one set of focus and values that you're focusing on and purpose, then even when things get crazy and hectic, you can open your little notebook of something you made 3 years ago and say, okay, these were my goals. This is what I need to focus on, right? Because it happens to all of us. We all get busy. We all lose track of our goals. So that being said, beware of who you ask, because there is a difference between opinion and facts. Often I do collections, and when I get people in for IRS collections, something happens because someone in a similar business told them something and they did the same thing. For instance, I had a client that said that, well, I deduct all my mileage because my friend who also does the same thing that I do says, well, he deducts his mileage. Well, his business is a completely different tax structure as the client that came in. So he's not allowed to do those things. So tax advice is very, very woven to one unique situation. It's not so much broad. So if someone's telling you something, it's kind of more, look at it as an opinion until you get facts, right? Don't Google. Please do not Google, especially anything with sales tax, state tax laws, IRS laws. I can Google something and I can guarantee you it will be wrong. It's outdated. It's not from a scholarly source, right? So try not to do Google for questions, like don't Google, can I deduct my mileage? Because sooner or later you're going to pull up an article by someone from, 5 years ago, and all the tax laws change. Tax laws change constantly.
So Deanah.
Yes.
Letitia and Dr. Jennifer Pierre and I just completed the Liberty Bank's Academy for Small Business. Mm-hmm. And knowing the sales tax and what applies to you and the different taxes and stuff, there were people in the class even at the end who were still struggling with that. So I think that might be a good connection for you too. Maybe you can go and help with one of the trainings to say this is, or some, because it does vary, right, based on your business. And
it's huge. I have a lot of clients now. It used to be before that. When it comes to sales tax, I have a little bit back, but to answer your question, how it comes to news, because years ago, unless you physically had presence in a state, they couldn't charge you sales tax. But that all went out the window with, it's just a case called Wayfair that all went out the window. So now, basically, especially now that we're so online, right? I have so many clients I've met with in the last 2 years that predominantly have 80% of their business is online. Well, then you're worldwide and your fingers are reaching everywhere. So if you're doing something in the state of New York, it's taxable. There's all different laws and it's by state. So tax law is here because federal tax law is like all 50 states, US, Puerto Rico, Guam, right? Well, tax laws are by state, so every single state is different, and actually it will drive you crazy.
I just got a text message today. Someone selling products in Pennsylvania, so she knows how to tax them, but she doesn't know how to tax for the people outside of Pennsylvania. Yeah. So I think just like understanding your sales tax and when to tax, when not to tax, I think that is just so important.
Mm-hmm. And it's where you usually get in a lot of trouble, especially with the state of Connecticut. Because they like their money and they're aggressive in their collections. So another thing I says too, and a lot of times too with sales tax, believe it or not, this is exactly what happens. Beware of who you ask. You ask another person in your business, in your society, like you're both photographers, hey, do you charge sales tax? Oh, no, I don't. Well, just because they don't doesn't mean they're not supposed to, they're just not doing it, right? So that comes to my next point. So be careful of who you ask. Like, I say, I always use the adage, if your cousin Sam is a dry cleaners and he has his own business, but he doesn't file taxes in 5 years, you probably don't want to take his advice. So it's always beware of the information you're getting and where you're getting it from, and further on in the slides, I have a good list of, what I call like solid information. You want to make sure you go to those solids information sources. We're not Googling, we're not looking on TurboTax questions. Like we know, like we're getting the word from the horse's mouth, so to speak. So a lot of clients, when I come in and I meet with them, I always ask them, like, what are your goals? What do you want your business to do? And I say, what are your fears? Like, what are your setbacks? And everyone always has the same fear, of course, because I'm a tax accountant. So what do they say? They're always afraid they're going to owe a lot of money in taxes, right? And I always say, I hope you do owe a lot of money in taxes, because that means you're doing really good, right? It means you're really good at your business. But not everyone does succeed. A lot of it is, like I said earlier, there's unrealistic goals. You have no business plan, because what ends up happening is we get crazy and hectic and we're on that escalator going 100 miles an hour. We can't step back and focus, right? Another huge problem, not investigating the market that you're in to determine your competition. I always use the analogy, why would you open up a sub shop next to Subway, right? It doesn't make sense. Another huge problem, especially for service people who are service oriented, they're not billing the correct rates, or they're not collecting their fees fast enough. They're waiting too long to invoice clients. Another problem when you first get in business is too many people give out discounts and freebies. And yes, there is something to be said about word of mouth advertising, but you want to be very selective of the discount and freebies, because there are certain people that don't have your entrepreneur spirit that will not pay it back to you, right? Another problem is you're not networking enough. You're not building up a network of professionals to collaborate with. So you don't have that people to vent with when you're feeling frustrated. I even have a group of professional friends, that I vent to when I'm frustrated, or if I feel like my career isn't going the way it should, or something's out of line, right? Another problem is they underestimate how much time you need to devote to your own business. And then another huge aspect of it is not planning for taxes and fees. And I call it first year self-employed sticker shock, when they get their tax bill and the poor client's looking at you from across the table and is just shocked about how much money they have to pay, because no one really took the time to explain to them, how self-employed tax works, how it is being self-employed or owning your own business. Because again, we've jumped in with both feet and we haven't really kind of tested the waters, right? And that happens a lot. So this is one of my favorite quotes. So it's the only place where success comes before work is in the dictionary. It's by Fidel Sassoon. It's a kind of famous quote. It is one of my favorite. Being planned and ready is one minor step in getting it done. Not being planned and ready is also how you get into a lot of trouble. So I would love to sit here and tell you that you need to go out right now, buy the most expensive computer, go to Staples, buy yourself a $1,500 home office, re-wallpaper this. No, you don't. You can sit at your kitchen table. You can sit in a chair. You can do this in your car.
Your couch.
Or couch. Yes, you have two options. You have low tech and high tech. It depends on your business and what you're comfortable with. Most younger people are very comfortable with high tech. High tech can be dangerous, because if all your high tech things are not working together, it could cause trouble. At minimum, for micro to small businesses, you really don't need too much software. It depends on what you're doing. If you're doing a lot of invoicing, you would want to get an invoice software. Now, your invoice software doesn't necessarily have to be QuickBooks. It could be something that's very tailored to your trade. Like there's billing software just for plumbers, just for electricians. There's billing software just for craft people. So it could just be something. The billing software is the important part, or how you're going to do your bills. Maybe you're going to handwrite them. It doesn't matter, but you have to have a system. So the most low tech way of going about things is having a composition style notebook. I mean, the kind that are bound pages that the pages don't fall out, like you get when you were a kid in school. It has like a marble cover. And then you could just write everything, get in the habit of writing everything down. May 3rd, I drove to Mr. Jones' house, 15 miles, dropped off, invoice number, blah, 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 and product. And that's fine. You're keeping a record. It's a record. That's what you need, right? Whether it's electronic or on paper. You need pens and highlighters. A shoebox, very important. Feel free to laugh. Everyone always does. As you're going through your year, if I ask you on April 15th of 2021, Sammy, when you went to Home Depot on March 3rd of, 2020, was this a personal purchase or is this for the business? You don't know, because, maybe you do, but you have good records, but for the most part, people don't know. So
And
I
I
always,
can tell you, my bookkeeper asks questions just like that.
yes. So you want the shoebox or the accordion file because as you go through the year, if something's a business expense, it goes in there. And then hopefully somehow you could tie that receipt to your bank statements because we're going to go through that in a minute. And then you'll be able to do that. Another huge thing is paper bank statements. And I understand in the world of identity theft, we really should not have our bank statements going to our house. However, you should have the ability to be able to print your paper bank statements. So this way you can throw those two in that shoebox or accordion file every month. In a perfect world, if you were a perfect client, which no one's perfect, you would take a manila envelope and you would have one for every single month, right? And if you have 5 businesses, you're going to have 5 separate envelopes, right? Because we're going to separate it by business. Because often what happens with entrepreneurs is they don't just have a one small business. They'll have a small Schedule C business, and they'll also say have rental property, and they'll also say maybe do like life coaching on the side. So they have multiple businesses. You got to separate things. You want to make sure you're not mixing expenses. And you always need a calculator.
We have questions from Dr. Pierre. Do you know of any accounting software that caters to physicians?
There are a few software specific. It would depend on the billing, and it would depend on how her bookkeeping system is run. Because she's a homeopathic physician, correct? Yeah.
Yeah.
So she's not so much billing on, is she billing insurance companies and that? So that's like another aspect of, what you're going to pick.
No, I'm a naturopathic physician. It's different.
Okay.
But
So you're not.
The billing is more so cash versus insurance. So previously I had been taking insurance and now I'm only taking cash.
Mhm.
So a lot of times the issue with insurance is that you don't get your payment right away. So that can make billing confusing. So
Mhm.
now it should be a lot easier that I'm only taking cash, but I've just been hearing about different types of software that might be more conducive to some of the expenses that you have with running a medical practice. That's why I was curious and asked the question about, was there anything that is, like maybe it already has some templates or things like that that might be helpful to use?
I know QuickBooks has a lot. Intuit in general has a lot. I know Quicken and Sage and Peachtree do a lot of medical and billing and medical software, but they're not very user friendly. And if you don't, the insurance aspect of it, I think if you made the billing template, I think it would be pretty easy. And then you could always do, if you if you accept credit cards, you have a processor. Sometimes your processor will actually be able to link you to software too. So if you Foursquare or any of the I call them tap and go credit card services, sometimes they have apps that tie into the credit card service for invoicing. So it will kind of make you like a carbon copy invoice as you go along. I don't think you would need anything on the lines of being complicated, but like I said, it's something that I probably would have to, sit down and look at.
Got it. I use authorized.net as my gateway, and that's connected to the electronic medical records that I use. So generally they give you like a PDF that you can upload into your software. I'm just in the process now of figuring out what's going to be best. And so that's why I'd asked about that. And I've heard about Zero and Zoho. So I had been speaking to someone previously who does accounting, and they said you just kind of have to play around with them and try them out. But I was just curious if you had any.
It's difficult, but I think the most difficult part when it comes to medical billing, if you get out of the insurance realm, is getting everything to talk to each other the right way. So making sure that your online billing and your credit card processor and your records keeping, everything's kind of going to be sitting in one spot. I have a client that's an insurance agent, and they had basically one person for bill. They had one app for billing and one app for invoicing, and it was too many things in too many spots. So I think I'm going to look at something that is conducive to, making sure everything works together in harmony. Like I said, I know a lot of Sage software and Quicken. Quicken isn't the most user-friendly, but it does work pretty well with a lot of other, and QuickBooks Enterprise too. But that I think that might be a little too much software probably for for what you need.
Okay.
Yeah. But
Thank you.
you're welcome. And like I said, the biggest important part is so much and if you go and you look, there's probably at least 15 or 20 different medical softwares that use for billing. And it's just going to be a matter of what, what ties into all the things that you have. Because that's another, like I have someone that had Square Payments and they weren't, and instead of using QuickBooks, they had Quicken, and the Square and the Quicken were not talking to each other and ended up doubling everything.
Yes.
To make sure that everything kind of jives together, that before you try something, like ask, the software people, the salespeople, hey, listen, does this work with these two apps that I have? Because everything's so app dependent now. Usually everything, you can kind of get everything to jive together, as far as getting your billing and your books in one spot.
That's really helpful. Thank you.
Okay. So our big mistake, number one, this is number one, because this is the one I see most common, and how you get yourself in the most trouble, is we have a separate bank account for your business. And a lot of people will say to me, well, I have a very small business. I don't need a separate banking account. I only go to craft shows once a month. Yeah, you do. Well, it's $10. Well, find a bank that's either going to give it to you for nothing, or a bank that your personal checking account is. There are tons of banks, that you can get it. And $5 a month it's a tax deduction. What are you going to do, right? It's $5 a month. You need a separate account. You need to keep your funds separate. In an ideal world, the only money that would be going into the business are your sales, and the only money that would be coming out are your expenses. But that doesn't happen because life isn't perfect, right? It's very important with your bank accounts to keep them separate. It's very important not to deposit your own cash into your bank account. And I will tell you why in a minute. You want to make sure the money that's going into your bank account that's deposited over the counter, or any cash that's going in from clients, that you're making sure that that's from sales. If you have to deposit money into your bank account, try to transfer it in from one account to another. So that's why it's helpful to have your business account, the same bank as your personal bank. Because this way, when you're looking at the statements a year from now, or if, God forbid, you get audited and the IRS auditor is looking at all these cash deposits, and you try telling the auditor, oh no, those aren't sales. That's money I deposited in for my business. They're not going to believe you. If they see it transferred in from your personal bank account they'll believe you. And then they'll say, well, where'd you get that money from to put in the business account? But in the meantime, you want to make sure that you watch how it's coming in. You also, what happens is, if you don't do your books, the person who's doing them is going to take all your deposits and say those were your sales for the year, and you're going to pay income tax on your own money, which doesn't really make sense. Try to only use one credit card for your business. Try to get a paper statement or print out the paper statement. Highlight whatever business charges there were for the business and put it in your shoebox. At the end of the year, or whenever you're going to do your books, go through, put all those charges in some kind of Excel sheet, or put it in your little composition book and write them out for when you're ready for your taxes. If you have to juggle between credit cards, which is very common with people in small business, just make sure every month when the statements come in or you're going online, don't take screenshots and save it on your phone. Phones die, paper is forever. Take the credit card printout, just highlight them or circle them and say business, business, or even just write bus or put a B there and put them in the box or your accordion file. It makes life a lot easier, one, for your tax accountant, two, for you doing your books and getting your things ready. And it helps you be able to compile some sort of knowledge of you're acknowledging how much you're spending, and you're acknowledging what's going on of your business, right? It's very
with the cash deposits too. I've had issues where I go and make a deposit from multiple different clients, and then 2 months later, the bookkeeper's like, which clients do these apply to?
Yeah.
And I'm like, I don't know.
Yeah,
so
that's a huge problem.
For me, I try to do everything electronically. If it's cash, I'll do like a owner's draw and just say I paid myself something, because when it's cash, it's just like no way to track it, and it makes it a little easier than having an accordion file or a shoebox full of receipts.
Yeah, and it's one of those things that if you have a bookkeeper, it's ideal, but if you don't have a bookkeeper, then you need the shoebox. It's those are your options. You have an accountant, a bookkeeper, or a shoebox. Like those are your only three accounting options. That's the way you have to look at it. So what happens too with cash deposits too is people will say, well, I took the cash as my pay. Well, that's fine, but you need to reflect that. Those are they still go on your tax return. You know what I mean? Those sales are still, just because they paid you cash, it doesn't just disappear. I mean, you still have to account for the sale somewhere. So lots of times what I'll tell people, deposit the cash in and then transfer the money out to you. And then you'll do the owner's draw to you, but at least put it in. So at least you're getting it as your IRS record, your records want to match your bank statement. So that's why you want to use your bank as the end all to be all of your business. Right. So you want to make sure that you keep your personal credit out of it. If you need to go to the store and go to the grocery store and the money's in your business account, then transfer it into your personal account and use it. Try to keep all your personal expenses out of the business account. Now, what happens if you're, say, for instance, you're a realtor and you take clients out a lot, and that's very common in real estate, right? And a lot of real estate agents are what you call statutory employees, which means they're basically self-employed, but they're not self-employed. Then you're going to be bringing people out to dinner and lunch. Well, then you should really keep track of that, right? Then you're going to be using your business account because that is a business expense, but you can't be piggish about it. You can't be bringing them, to, John Louise's in Greenwich, for $500 dinner. When you're only, when your sales and your commission, you're making $20,000 as a real estate agent. Everything has to be within reason, right? And
are meals included again for the deductions or the?
For now. Okay. We'll see. For now, you get half. There's been a lot of talk of bringing it back to 100% to help out business, but that's on the floor of the House, and we'll see. We'll see in January. We'll have to circle back maybe and do a tax update in January. We'll see what happens. Boy. Now and then. Another mistake too is not maintaining order in your records. So this is a huge problem I have with people who come in. And all ages. And people say when I give this talk, well, it's just young people. No, it's not. This is across the board a very common problem with clients. The bank does not know your balance. And what happens is my client will say, well, I don't understand because the bank said I had $5,000 in there. But the bank does not know that the day before you wrote out a check for $7,000. So you don't have $5,000 in your bank account. You're -2, right? Another problem is we don't write checks anymore. So we forget about that little novel thing that the bank gives us called a check register. And it's important in business, and I will tell you why. When you get bank statements, a lot of banks now, I know People's Bank doesn't, and my bank, Wells Fargo, doesn't. They don't give you copies of the checks anymore. You have to physically go online and look them up. So it's going to happen at the end of the year if you're not doing bookkeeping, which if you're a small business to keep track of things, sometimes it goes to the wayside. You're going to give the accountants don't know, or your bookkeeper does not know what those checks are for. So if you have the register, you could say, okay, yeah, check for this. Otherwise, you're going to get charged for a copy. You're going to have to look up all those checks, and it just makes, it's just easier. So if you're going to write a check out, just put it in the register, write out what it's for, the date, the amount, reconcile your bank account every month. If I say this at work so many times, I think everyone I work with would probably hit me, especially my boss, Mike, because I always say, if the bank rec is wrong, all the financials are wrong, right? So you always start with the bank recs. This means you're going to look at your statement. You're going to see what checks haven't cleared, what payments are incorrect. That happens a lot, especially with tipping in restaurants, or if you do an online purchase and say, for instance, things come out in batches and say you order supplies. One of my clients had a huge problem with the popular craft supplier. She would do an order and say for $200 and you get 20% off, but they would ship it in smaller shipments. And when you added it up, the prices she was being charged is not what she was being invoiced for when she ordered it online, right? So you want to make sure your payments are correct. Also, that certain charges on there that they don't belong to you, because that happens often. So you're going to look at your balance, you subtract all the things you wrote out that hasn't cleared, you add in any deposits that haven't cleared. That's your balance, not what the bank tells you. The bank knows everything after the fact. And if you're not looking at your bank account, or at least humor me when you get it, or just look at it, a lot of the problem with this stems from technology, because I can right now go on my phone and look up my bank account and I can tell you exactly today how much money I have. which in business, especially for micro to small business where you don't have a lot of cash flow, that's very important. You'll be able to do that. But if you're going to run your balance that way, still look at your statement every month and still realize that whatever that balance is just what's cleared. It's not what you have, say, EFTing or pending coming out. So it's really important to keep that in the back of your mind, because bounce check fees go from, I've seen them anywhere from $35 to $45, and they can be expensive. I mean, you get 3 bounce checks in a small business, it's $100. And that's basically about you working an hour or 2, depending what you do for yourself. So, I mean, they add up quickly. And even though, yes, they are deductible, no one wants a bounce check fee as a tax deduction. The next thing, the biggest mistake too, I see with this is more for service people or people who have to invoice, is invoicing. I will tell you, my husband's an electrician. He owns his own business. For the first 5 years we were together, I literally yelled at him constantly. Did you make them an invoice? Did you make them an invoice? He was terrible at invoicing. You have to have some sort of invoicing software system. This is especially if you're in like a trade or a sales business, because invoices can always match to receipts, and you want to be able to justify your income, right? You want to be able to match it. You don't want income coming out of nowhere. You want to be able to see the analytics. You want to know where your clients are coming from, right? You also have to, software or some kind of process is important because you want to be able to streamline it. Now, say for instance, someone who does a business like Sammy, maybe her invoices aren't as involved as say a guy who's a plumber who's doing a whole house. I mean, that's going to be a 5-page invoice because he's going to have to put every part and every ounce of labor, you know, whereas service businesses or craft businesses, it's a lot simpler. You're just, you know, you sell it and this is your invoice. Another problem is you wait too long. Well, if you do a project for a client or a customer and you wait 3 weeks to bill them, do you really think they're going to be in a hurry to pay you? They're not. Even if they're your best friend, even the people forget. So the best thing, you know, a lot of these software has is to be able to email invoices, or they have the ability to invoice on your phone. That I was talking to Dr. Jennifer before, that it ties in with everything you're using. You can go on your phone or your tablet and you can bang out an invoice literally as soon as you're done with the job, right? So that's great when you send it, but when you're sending it, put the payment terms on it. I see, you know, I go in clients' books and I look and they don't have any payment terms. So if you don't put payment terms on an invoice, how are they supposed to know when to pay you, especially if you're billing a company? If you don't put payment terms on for a lot of companies, they'll pay you when they're ready, which sometimes will be 60 to 90 days if it's a larger company because that's their policy, right? So you want to make sure you put payment terms on the invoice, and you want to make sure your client understands your payment terms when you put them on there. So if you're put on, you know, it's due in 10 days, you mean it's due in 10 days. You know, you're not going to wait, you know, 3 months for you to pay them. And that being said too, is if you do have someone who is consistently not paying you as a client or a customer, they're not a good client. And that's something that even professionals that are attorneys and accountants, that they have a hard time realizing. Well, they're a really good customer. Well, no, a really good client or customer always pays you. A really good client or customer doesn't string their, you know, their receivable or their payables out so 90, 120 days. It just doesn't happen. They're just not a good client. Even if they're giving you business, they're still not paying you. So you're losing money, right? So that's another thing, you know, you have to really realize, make sure that you're collecting. A huge problem that Sammy mentioned earlier is not collecting the correct sales tax for the correct state, or not having the feature turned on in your Square. That's one of those things when people come into my office and I look and they're an online seller and they have the Etsy and, you know, all the websites, they don't have it turned on. A lot of these credit card processors and a lot of the people, if you sell on eBay and all these sites you can sell on, either they'll collect a tax for you, which that case is called a marketplace facilitator, or you have to charge it. Turn it on for its collecting. Square, for instance, will only do it if you turn it on. You have to turn it on. So make sure the feature is turned on. You're just better off collecting it and making sure you're doing things right? So when it comes to, so here's another big, so going forward, segueing into sales tax. So the online platform with no understanding of sales tax is a large liability you do not want to get into. A lot of the problems come from you don't know what percent to charge or what rate. I will give you an example. In the state of Connecticut, we have 4 different tax rates. So what are you charging? You're charging 7.35, you're charging 1, you're charging 6.35, you're charging 9%. What are you charging? You have to really know. And it's very dependent on what you do. Not knowing what states are taxable, right? So if you're doing business online, you have to realize, hey, I got a sale in Ohio. Let me see about what's taxable. Not knowing what's taxable in the services you provide. For instance, in the state of Connecticut, if you store boats, you're only allowed to charge sales tax from May 31st to September, I believe, 31st. You're not allowed to charge taxes on mooring in the winter. Now, that's something that you would not know unless you sold boats or you were mooring. But there's certain times in the state of Connecticut, our tax laws are very helixed and very complex with sales tax. You really have to realize what's taxable, at what rate, and what isn't. For instance, you sell a loaf of bread. Is it taxable? You make a sandwich on a loaf of bread, 7.35% taxable. It's it's situation dependent on what you're doing. So you need to know what's taxable in the services you provide. It needs to be clear to you. And if it's not, believe it or not, you could call the DRS, and they are probably the most helpful sales tax department in the nation, because they will explain. You'll say, I'm doing this. And if it gets down where it's so fine tuned that you can't tell in the guidance, you can ask them and they'll tell you. They want to help you because they want to make sure that they collect the money, right? Probably the worst thing you could do is not remit sales tax, but you're charging it. So you're collecting it, you're keeping it, but you're not giving it to the state, especially for the state of Connecticut. Another bad thing is not applying for a tax permit. It's $100 now. You do it online. It's fairly simple. You go onto the website and do it. It's not too difficult. You don't have to have fancy paperwork from a lawyer. You can just get a sales tax permit. You can ask them, you can call the unit, the sales tax unit, and ask them, this is what I'm doing. Do I need sales tax? I also have a load of information on the website. I have the link in here later. Another huge problem is they don't track your sales adequately, so you don't know what your sales tax liability is. And this is where that whole invoicing versus tracking your invoices, tracking your cash comes in, especially if you're in a taxable. And everything everyone does is taxable. For instance, what I do is not taxable. They tried, but it didn't work. So you have to be able to track your sales, right? Because you need to know what your liability is. Now, you're either going to file monthly or you're going to file quarterly. Sometimes you even get away with filing yearly. It depends on the code that you're entering when you apply for your sales tax permit. The state of Connecticut has algorithms. They know the volume of business that professions and trades do. So they will determine, usually at first, they'll do you monthly, and then they look at your liability for the year, and you'll be bumped back to a quarterly basis if you're a smaller business. So sometimes that quarterly basis, when you're only doing your taxes every 3 months, makes it worse because you're not in the habit of checking your sales. So you want to make sure you could track your sales. You want to be able to at all times to know what your liability is for sales tax. Another mistake that people do is when they fill out their sales tax form, they add the sales tax onto their sales. So they're paying sales tax on their sales tax. So what you're going to do is you're going to back out the sales tax off here. So if your sales were $1,000 and you collected $60 in tax, even though your net, you say, sales say 1060, well, 60 of that is sales tax. You're going to report the 1,000, not the 1,060, right? Otherwise, you'll be paying tax on 1,060. So that's another common problem too. People do when they have their own sales tax. Don't rely on Google. Google's not good for finding out sales tax. The best website to find out is go to the Department of Revenue in the state that you're dealing with. Otherwise, there's a resource out there. They're called Avalara. They're actually a programming operation that accountants use, but their website has excellent resources as far as understanding what taxable is and what's not. You can go on Avalara. They have basically like a little slideshow that they give. They also give free webinars. Obviously, they want you to get their software, but just to do the webinar to have some kind of understanding of sales tax, they're a very good resource to have. And if you get to a point where you're getting multi-sales and multi-states, they actually will do your sales tax returns for you, and they go in by using your software. So your QuickBooks, your Quicken, whatever you're using, they actually go in, tie into it, or your Square account, and they'll file it for you. Obviously, there's a fee, but I mean, they will do it. So there is software out there too that will file all these forms for you. Another huge problem people do, which, is, I call it professional limbo. I always say the right team makes you or breaks you, right? So lots of times when people go to see a professional, especially when they're a small business person, they're afraid to ask questions because think about it. If you're in a lawyer or an accountant's office, they can be intimidating. Even insurance agents, you're afraid to ask questions, right? Because you don't want to seem like you don't know what you're doing or you don't know your business. And I always say the dumbest question is the one you don't ask. And sometimes when it comes to your business and your baby that you've been growing since this little idea you've had in the back of your head, driving in your car in traffic one day, becoming this blossoming thing that you've created, you should protect it like it was your own child. I mean, that's the level of, questioning you have. And I always say, you would never have anyone babysit your kids unless you ask them 50 questions. Look at it the same way and you go see a professional. Look at it that they're not so much helping you, but look at that they're babysitting your business. Ask the same questions you would ask a babysitter. I know it sounds very simple and down to earth, but that's kind of the way you have to look at it. You have to be forward. Please ask for your fees up front. I will tell you I'm an accountant. I will always tell clients, I'm going to tell you our charge is about this. It can go up to this. I can give you more definite number when I see what state your books are in for your tax return, So I know how long it takes me to do something. All accountants do. Don't fall for I don't know, it depends. It could be $250, it could be $1,200. That's a huge price difference, okay? I can see a couple $100 here or there, right? But you can't, ask for upfront. The other problem is they don't have the right professional for the right job, right? So often what happens is they'll get a lawyer and the lawyer will be giving them accounting advice. Well, I can't give legal advice. Lawyers aren't supposed to give financial advice, right? So you have to make sure you have the right professional for the job. The best way to, if like you have an insurance agents are probably the most underrated, most helpful person you will ever have in your business. And I will tell you why. If you have a personal lines agent or any kind of insurance agent, they network with everyone. A lot of insurance agents sit for their Series 6 and Series 7's license. So they know financial people. They'll be able to get you in touch with an accountant. They'll be able to get you in touch with a good money manager and someone who's going to be able to help you with an IRA, things of that nature, because they deal with that kind of people all the time. They'll be able to get your real estate agent. They're one of the most valuable people you can have as a good insurance agent. They will connect you with people. Unfortunately, we're in a society that we don't like to have agents, but they are good. But don't let your insurance agent do your taxes, right? Unless they're licensed. Another problem is I've seen a lot of, especially small business lately, they get sucked in by these companies that say, well, we're going to do all your bookkeeping throughout the whole year and you're going to pay us X amount of dollars a month. Why? I don't understand that. You shouldn't get billed for a service, in my opinion, unless they're actively doing something. And another thing is you should never let a professional dictate how much you're going to spend. If you're working with a professional, no matter who they may be, a lawyer, accountant, a broker, whoever, and they can't work within your budget, don't work with them. If you're not comfortable talking to them, don't use them. Always trust your gut, right? Your gut's never wrong. Also, little letters after the last name mean something. So if you look at mine, it says EA. That means I'm licensed by the IRS, which means that at the end of the day, besides answering to the owner of my firm, I answer to the IRS. So I have to conduct myself in the matter of professional standards. If someone has little letters after their last name, they can't use them unless they're actually licensed. It's a big deal. So look them up, look them up on FINRA, FINRA, and look them up on the IRS website. You can look me up on the IRS website. It just gets confusing, as we know, because my first initials. So, but you look them up and don't be afraid to ask questions. And if you're not comfortable with them, don't use them. You want to be able to feel comfortable. And also when you're looking at someone who does hourly billing, like if you're looking at an attorney or an accountant, make sure you ask, listen, how available are you? Do you answer emails? Can I email you? Are you going to charge me for emails? There's a lot of firms out there that if you email your accountant, they will charge you for it. There's a lot of firms out there, if you call and ask a question, you can't get a hold of them. You don't want a firm like that. You don't want to deal with any professional like that. You want to either be able to talk to an administrator or a paralegal or your person that you're employing, right? And because they're helping you. And if you have a question, you need it answered. You can't wait 3 days for them to get back to you because they don't view you as an important client because you're a micro business. And if they have that idea, then you need to find someone else, right? So here's our big tax mistakes. So besides the first 5, which are pretty good, these are the most common that I see consistently on a consistent basis. Maintaining their books on a regular basis. So if you do not periodically maintain your books, you don't know how much money you're making. You don't know if your prices are right. You're not able to track your expenses, or even worse, if you have an employee and they're stealing. And in the end, I'll be honest with you, it makes your tax return cost more because it takes your accountant longer to sort through your shoebox and do your tax return, right? And if you don't mind paying, then I guess you don't have to, but you really should. I mean, even worse, and this is what happens a lot when I get cases that come to me in collections, the thought of doing 12 months of bookkeeping makes them not file their taxes, which is by far the worst thing you could do, is not filing taxes when you owe. It's the largest penalty you can get. So even if you can't maintain your books, when I mean maintain, are you going to sit there with a ledger and, put no, but at least have some idea of what your sales are and what your expenses are. So either put it in an Excel sheet. And the good thing now with Google is Google has the sheet, so you don't have to have that Microsoft Office, expense, which sometimes for a small business, micro business, that $500-600 can be expensive. So you can use Google. You can use Column or Pad. I'm quite fond of it. But, just something, even your notebook, just write it down. These are my expenses. Even if you just have a small dog washing business on the side, a page a month, just write it down. Or use a day timer, or 1 page a day day timer works out really good too. That's actually how I keep my track of my time at work. If I ever lost it, I'd be in big trouble because I write everything in it. And if something, listen, this is my expense. This is where I drove. This is what I sold. And just do it by day. Get used to carrying it in your pocketbook or your car or wherever you do your business, and just write everything in it, because at bare minimum, you'd be able to take all that, run it on the calculator or in a quick, sheet, and say, okay, so I spent $40,000 this year on supplies and I only charge $50,000, which means, you made $10,000 in profits. So either what do? You either spend too much money or you have to adjust your prices, right? So that's a huge problem. And I know maintaining your books on a regular basis is something that, when they come into accountants, it's the first thing clients say, I'm really bad at bookkeeping. You say, that's fine. I'm not going to lecture you. No accountant, good accountant, will lecture you about not maintaining your books. It's just something that you do, and realize that if you don't do it, it usually ends up costing you money. But not every business needs their books done every week or every month. Sometimes people only come in to see me, believe it or not, 2 times a year, 3 times a year. It depends on how active your business is. Sometimes you don't need to go into and have anyone do them. You can do them yourself because you're really small. It's just make sure you're doing them, or at least keeping track of, especially of your income and your expenses, to make sure that everything's coming out on a good basis and you know where you are at any given point in the year. So another problem is tax law versus legal entity. So someone will call me on the phone. This is how the conversation goes. So they got my name from the QuickBooks Online directory, or they got my name from, the IRS website, or for a referral. And I'll say to them, well, how do you file your taxes? And they'll say, I'm an LLC. That doesn't mean anything to me. It's very confusing for people, because your legal entity formation in the state of Connecticut and how you file your taxes kind of are 2 different things for the most part. So there's common ways to file your taxes. So there's a partnership, that's the 1065. You have a corporation, an S corp, which is called a pass-through. Same thing as a partnership. That means they don't pay taxes. You as the members pay the taxes, not the entity, right? Corporation is an entity. They pay tax. Right now, the rate is 21%. Nonprofits don't pay taxes to a point, depending on what type of one they are. That's a 990. However, the most common small businesses and micro businesses, they're called a Schedule C. They go on your 1040. It's a Schedule E if you're a landlord. So the best thing to decide is when you decide you have this plan and you're going to open your business as an accountant, I would like to think the first thought after you decide how you're going to raise capital and whether you're in compliance and what your business plan is, you're going to say, I'm going to call an accountant and I'm going to decide how I'm going to file my taxes. It never happens that way, but in my own little mind, I like to think that. It's kind of important if you're thinking about getting into business, talk to someone about taxes before, because your return could be due from March to April 15th. And to be quite honest with you, if you decide to be a fiscal year corporation or a nonprofit, your tax return can basically be due anytime throughout the year. So it's also very important to get people in that they want to start the nonprofits. You need to hire an attorney and a tax professional. There's no getting around that. There's no, my friend knows a guy, he'll get it. I'll do it myself. No. You need to talk to an attorney and a tax professional if you're going to start any type of nonprofit, just to see there's a lot of processes and things you have to do to get set up. Another time you definitely need to talk to an attorney or some kind of legal services is if you're going to have partners in a business or you're contributing something of value to get it started with another person. Say, for instance, Sammy and I are going to go in business. We're going to buy a hot dog cart. So I'm going to work the hot dog cart and Sammy's going to remortgage her house and take out an extra mortgage for $40,000 to buy this hot dog cart, but I'm going to run it. And then we're going to decide we're going to split the profits. I'm going to get 30 and she's going to get 70 or however we decide we're going to do it, right? What happens the day that, what if I decide I want to quit? What happens if Sammy decides she wants to quit? What happens if I go into the business and instead of selling hot dogs, I don't know, I start selling hot dogs behind her back and not sharing the profits with her? There's no formal papers there. There's no agreement, right? So if you're getting with partners with another person, even if it's your spouse, it's a good idea to run it by some kind of legal aid attorney, something of that nature to help you out, right? Because you don't want to get in the situation where you end up putting yourself out or having a liability after the business goes down the tubes, right? So that's very important. Another misconception what people have is self-employment tax and paying yourself. So you have to understand what self-employment tax is, first of all, and how it works. So if you have $400 more self-employment income, you have to pay a tax. Or if you have $108.28 of church income, that's a real number, by the way, from the IRS. So self-employment tax is 15.3%. Half of it is deductible as an above the line deduction, which means it gets off what you owe. But over a certain threshold, the calculation changes after that 15.3%. When I say income, I mean what's left. So here are your sales, here are your expenses. That number that's left is what you pay taxes on, right? So the tax is calculated on your tax return, is added to your tax bill. It's not like you pay self-employment tax and you don't pay income tax. You pay both, because self-employment tax is you paying into Social Security and Medicare. Normally, if you're working for someone, your W-2, they pay 6.2% and you pay 6.2%, right? That's how it works on a W-2. Well, now that you don't have that W-2, you're paying in that tax. That's what's going in your Social Security bucket from when you retire. Another problem is that you can face fines if you don't pay estimates. This comes into play lots of times when you're coming off from being years of being a W-2 employee and you have a full year of being self-employed. You have to make the 100% of your withholding from the year before. There's certain rules that you have to follow. You just can't convert and go off a W-2 to a Schedule C and then not make estimates and not get it. It's not going to happen. It's very rare that it doesn't happen.
So, Deanah,
Mm-hmm.
I don't think I was aware of that. So when we file our taxes,
Mm-hmm.
we're paying self-employment tax, and that's paying
Your Social
Security and what else?
And Medicare. Yep.
I
You're
didn't
paying
realize that.
Yeah, that's what self-employment tax is. So you're paying into that system because you're not getting a paycheck. Basically, they don't let you get like a free ride, to get around the W-2 of the self-employment tax.
So as long as you're filing your taxes, you're paying into your Social Security and Medicare.
Yep, which is important because we all know when you retire, for Social Security, they go by the average of your highest earning years, right? So you want to make sure that you are paying into it, the year you convert from the W-2 to being self-employed can be very tough. You need to understand how to pay yourself and how much it will cost you. So many times I get people in the office and they say, well, I'm not self-employed. I get paid on 1099s. Okay, you're self-employed. If you're not paying payroll taxes, you need to pay them on your tax return. You don't get around that. Certain people think if they get in business and they make everyone pay them on a 1099, that they're not going to have to pay taxes. Well, 1099s equal self-employment income. It's very rare in instances that it doesn't. There's also times that you're self-employed, and if you're not guided the right way, you don't realize that certain things can be deductible to you. For instance, if you pay 100% of your health insurance premiums and you're self-employed, they can be deductible. They're not always deductible, they can be. Same thing with SEP contributions to your IRA. Every situation is different. It's very important that you get tailored to your situation advice. A very common problem, as I tell people, is this is how IRS law is written. You absolutely positively cannot do this unless you're this, or this, and this. So it's very complicated. It's not very cut and dry. So it's very situation dependent on what you're doing and what your goals want to do. And I always say there's two lives that you can go down to as being a Schedule C or self-employed. You're either going to pay taxes or you're not going to make money, because you can't do both. You can't show no profit in your business because because you're expensing everything and you're spending everything you have, and then turn around and expect to go for a loan and have the bank approve you. You're either going to pay taxes on what you make or you're not going to have income. It's kind of your only two options. You don't get to do both, and that's a very common problem, unfortunately, with people who are in this business for themselves. So that leads us to the tax snowball. So you enjoyed all your money. You just forgot one thing throughout the year. You got to pay taxes on it. So the IRS will fine you if you owe and do not file. It is the worst penalty you can get. If you owe and you do not file, it's bad. You're better off filing a tax return on time or on extension and not paying than not filing at all. So penalties and interest, they're the most amount usually you have to pay. They're not always abatable, meaning that even the best, tax accountants, they can't say that they can never, first of all, we're not allowed to say, first of all, that we can get rid of those penalties for you. And if you're dealing with anyone who back taxes and they tell you that, run, because they're not being honest. They're not allowed to tell you that. You can't always guarantee that the penalties are going to be abatable. The IRS has a matching system. This always comes as a surprise to people, meaning that all those 1099s and mortgage statements and W-2s, they go to them, and when they pull your return, there's an algorithm that matches it to your tax return, right? Which kind of, they don't do the honor system, like they check you. So what happens when you don't file a tax return? They do something called an SFR, which is a substitute for return. That means that you have all these 1099s and they know that you didn't file a tax return. So they're going to file a tax return for you. Now, are they going to say, oh, well, your expenses are no, they're going to use their own numbers, and obviously it's going to most likely be in their favor because you didn't file, and you still would have to file a tax return, and then you're going to have to hire someone, and it turns into a snowball. But if it does, as often in business it does, you have to look at it this way. Everyone has an isolated issue or two that puts them in this situation. They just didn't wake up one day and say, something, I am not paying taxes this year. No one does that. It's been very rare. It's always an extraordinary life event. They got divorced. Their mother died. They had to quit their job. This year, COVID happened. There's so many things to look at. If you know you're in that situation and you need help, or another business owner that's in that situation need help, just tell them, go talk to someone, go look for an enrolled agent, look for a CPA, but make sure they do collections. Not every CPA and not every EA does collections work. There's not so much of an art form to it, but there's certain procedures that if it's not done the right way, it can actually end up costing you money, the taxpayer. I'll give you a big hint. It's not those pay your tax debt now schemes that you see. I settled my tax debt for $10. Yeah, no, that's not going to be you. So don't even bother to call them. They're just going to waste your time. Another huge thing of tax snowball that happens when people get in trouble, they don't pay their payroll taxes. Just like withholding sales tax and not remitting it is bad, withholding payroll taxes and not paying them is 150 times worse. Unlike personal taxes for income taxes that are only collectible for 10 years after the first initial collection period, payroll taxes are collected forever. The penalties cannot be evaded. There's civil penalties, which means that they cannot be evaded. They're very large. You can get with TIGA, which is called the Treasury Inspector General Office after you. That's from the Social Security and the IRS. So you want to make sure that if you have employees and you're withholding the payroll taxes, please remit the taxes. You also want to make sure please use someone reputable. Use ADP, Paychecks, Intuit. There's a local bookkeeping firm in West Haven that I know that does they specifically do payroll. You want to make sure that you're going with a reputable person, right? Because you want to make sure that your employer taxes are being paid, because that's one tax bill that you don't want to mess with, right? And whatever taxes you're paying, they are a deduction to you, so it's in your interest to pay them. The other big mistake is not everything is a write-off. So there are common business expenses. We all know business, office supplies, but not everything is deductible. There's rules, right? The IRS rules something called, it's their language, ordinary and necessary. It's an IRS section code 162. It's the definition of a business. So it's in order to be deductible, everything has to be ordinary and necessary. That means Sam is a writer, right? And she does social media and marketing, right? So Sam can't go out and buy a yacht and say it's a business expense, because writing, I'm sorry, Sam, you can't. I'm sorry. I know I'm a terrible.
Now I gotta cancel my order.
Yeah, you can't, because having a yacht as a social media and a startup entrepreneur, it's not an ordinary and necessary business expense.
I'm a writer. I can make it so.
Yes, but you can't. So it's difficult when that happens. So you have to make sure that what you're doing is qualified. Well, how do you know? Well, the IRS, believe it or not, has this wonderful website called Small Business and Self-Employed. It is full of a plethora of information. I promise you it's not all written in accountant IRS speak. They also have a series of videos that you can watch. One of them is like the basics of like, this is what we look for when you do things wrong. So common mistakes of expenses are people take this home office expense when they don't have one. They take excess meals and entertainment when you're not in a business that has them. For instance, if you're an insurance agent or or something like that, or if you're a plumber, you're not going to be taking clients out to business. My plumber's never taken me out to lunch. I don't know about yours, but mine hasn't. Now, there's also different things, what they call de minimis deductions, meaning that if you have parties for your employees, or if you take, you have a bookkeeper and you take her out for a birthday, that's a different story. That falls under a different set of rules, but there's a lot of rules. So the best bet is to either educate yourself by, going on the Small Business Self-Employed website. I have the links at the end of the presentation. And just educating yourself, reading it. And I know it's painful. It's really not that bad. It's not written in IRS speak. It's written, the Inspector General, they wrote it. It's very easy to read. It's meant to be informative to small businesses. Or if you don't, or you can always ask your tax accountant. Or if you can't afford the tax accountant and you're using Vita, sit with your Vita rep. They'll tell you. The Vita rep knows. They've been trained by the IRS. They could tell you, this is a list of stuff you can deduct. Another huge problem is mileage. You don't get to drive from your house to the office and deduct mileage. It doesn't work that way. There's certain rules with mileage, just like there's rules of home office expenses. You have to keep a log, and lots of times this is really easy now because there's 150 apps out there that keep mileage logs. As long as you have the ability to somehow save that forever and print it, if you're ever audited, you're fine. Otherwise, writing it in your little composition book is fine. But keep track of your mileage. Make sure you're writing, I drove from here to here to here and I stopped here, whatever, just write your mileage down. You have to keep track of it in order for you to use it. You don't get to use a deduction and guess and say, I think I drove 20,000 miles this year. So that's what you're gonna tell your tax accountant. You have to keep track of it. You have to be honest. They don't, that's one of those things, if you're on the honor system, you have to have the backup to go along with it. Another common mistakes that people do is they'll get a loan from their parents or from friends and they put it inside of the business account, which is fine. And then it ends up getting counted as income because they're not accounting it for it somewhere on the books. Make sure if you're getting personal money or loans that you really make sure on that bank statement, write yourself a note, write it in red pen, whatever you have to do, that's not income. Say this is a loan from Bob Jones. And it's not going to hurt you to say, John Jones borrowed $1,000 from Bob Jones, and just have him sign it. Just keep it in with your business record. That's all. They gave you a loan, that money, it's not income, because you don't want to pay taxes on that and you'll forget about it. And you're going to give your books in at the tax account or the at the end of the year. And you say, oh, you got $10,000 in April. And you're like, oh, most people would remember that, but maybe you're not. Maybe you're not going to remember that. And you're going to count that. It's going to be income. And you're going to pay taxes and self-employment taxes on the money that you're borrowing from someone to get yourself in business, right? Another thing you have to be very careful of is deducting personal interest and non-business interest on your books. Although there's certain tax breaks you get for having student loans and this, that, and the other thing, and you can deduct the interest from student loans if you're within a certain AGI, a certain income level, you don't get to deduct your student loans as a business expense. People do it all the time. They try, oh, I had to take. No, you don't. I'm sorry, but you can't. There's certain rules that you have to follow for expenses. And the best part is, like I said, educate yourself, ask somebody. If you're not sure, maybe put it in a category. QuickBooks has this feature called Ask My Accountant. I love it. I have all my clients use it, but you can even you don't have to have QuickBooks. You can have your little binder or your notebook and say, I don't know if this is deductible, put a question mark there, and that you'll know, and then find out. Either go on the self-employed, ask Vita. You'll find the Vita tax preparers are very knowledgeable. Most of them who volunteer are usually either people who have either CPAs or EAs or people who've retired or community service people who've taken the class. So they're very knowledgeable. They'll be able to tell you what you can and can't deduct. But if you think you can't deduct it, usually you can't. But that's not necessarily the case, right? So these are the little minor sabotages. So these are the little tiny things that you do that have a big impact, not so much with your tax return, but with other things. The little things that matter, if you're gonna hire an employee and you're gonna put in your ad, I need references and background checks. For the love of God, please do them. Do not ask for references and don't call them. Don't say you're going to do a background check and not do them. You will be surprised the amount of people that will require that in the professions that do not check. They put the background check in there to scare off applicants and they don't actually do it. Especially if you're hiring someone through an online service, you need to check the references, right? And you want to make sure they're work references. If they're references are, if they're 35 years old and supposedly been doing this for 25 years and their references are their 2 aunts and a cousin, put the resume down and find another one. You want professional working business references. And that's another instance too where your networking is going to pay off, because often you can get referrals in for very small businesses will get referrals in from your networking, like someone knows, they need an employee and they'll help, right? Speaking of employees, and many times a person that works for you is an employee. They are not a 1099 subcontractor. This isn't so much a tax issue as much as this is a Connecticut State Department of Law, labor issue. So the best way to tell, the most simplest way that my boss feels is this is what you have to ask yourself. Do they do what I do? Do they have their own insurance? Do they have their own customers? If the answer is no, then they're an employee. If you're like, for instance, your friend that answers the phone that you pay cash, she's an employee. They need to be on payroll. They're not a 1099. If you tell them when to come in, what to do, what to work on, they only work for you, then that's how it works. How you decide to do things is a different story, but understand that it's Department of Labor that goes after this. There's something called the ABC test. If you ever can't sleep one night, I recommend that you read it extensively. But you can actually look that up, the ABC test. I'm sure too in the library that, they'll have many, this is an issue that comes up every year in the network. Last year we did a presentation of all the tax preparers that were in the group. And this is the question that came up that people had the most problems with. They didn't know when they're a 1099 subcontractor or if they're an employee. And if you really can't tell, then call your accountant, ask your Vita rep, ask the person who's helping you with your business. Ask them what you should do, right? And you can always work on the Department of Labor website as well if you need to in the state of Connecticut. Another problem small business people do, because we're riding that escalator at 100 miles an hour, is they're giving an employee too much control over their affairs. So you have to remember, keep your business and personal accounts separate. Even though I'm telling you to link the account, that does not mean that you give the girl who does your books your personal password. You want to make sure that your passwords are different for your business and for your personal when you have employees that are handling things. You also want to make sure that employees don't have the ability to change passwords. And you want to make sure that you put a separation of duties in whenever possible. That is not easy when there's only 2 people working in an office. If you can't do that, then you need to check your records yourself or have your books looked at by another set of eyes. 2 heads are always better than 1. And if you think of it, of the ways, the most popular ways that, what's called pink collar crime, which is small crimes that are committed by women, are often in small businesses. Small businesses cannot absorb the losses of having fraud or larceny in their business. So it's very important that you're signing the checks. They can write them out, but you're looking at the invoice and you're signing a check. And never, promise me, you will never sign a check when you are busy, because when they want you to pass something by you, that's when they're going to ask you. They're not going to ask you when it's just the 2 of you in the office and there's nothing there. They're going to ask you when you're on the phone with clients and you have a bunch of stuff to do. They're going to put a pile of checks in front of you and be sign it. Don't put them aside. You sign them later. Always make sure there's invoices that goes with checks when you have people. And just because they're your family or friend does not mean that they will not do something to harm you. So get that idea out of your head. And for those who don't remember what people call it, a lot of different things. They call it larceny, they call it embezzlement. It's stealing when it comes down to it. So you don't want to make sure that no one is stealing from you. And not only that, no one's trying to steal your customers from you either. And that's another thing you have to be very careful of, especially when you use 1099 contractors. I had a situation earlier this year with one of my clients. He used someone who's a 1099 subcontractor. They were able to go in the office and got a client list that they had laying on the desk and started calling up all his clients and trying to get them to come over to him because he knew his prices, right? Because he worked for him. So he knew much how he charged for jobs. So things like that, what I call that, you need to keep those separate, keep it private, always protect yourself. If you protect yourself, you don't have to worry, always just kind of be vigilant. Don't get comfortable with anyone. I know it's a terrible attitude to have, but you have to do it. So these are a good lists of resources. So I always hate when accountants talk in, accountant speak and use all these abbreviations. I can't stand it. But unfortunately, that's how all government agencies work. So FINRA is for people who have a Series 7's license. You could check brokerages on there. You're not being nosy. You're going to employ them. Check. Who cares? It's another problem. People say, I can't do that. I'm being nosy. No, you're not being nosy. It's if you're paying for the license, go look them up. Find a tax professional, IRS Treasury. This is the one that if you click this link, you can go on, you'll find me or anyone who is an AFTPS preparer. To find the Vita Tax Clinic, this is the website I would use. Please be very careful when looking at the Vita Tax Clinics, because you will, if you Google it, you're going to get a lot of clinics that will either drive you to some kind of site or aren't legitimate. So if you're looking for one, click on this website from the IRS and they'll find you. And I guess the library has one, Sammy said, so that's wonderful. If you want SBA information, that's the website for the SBA. Lately with all this PPP loan, be careful because there's a whole bunch of imposter sites. It's always .gov. Everything for the government is always .gov. It's always their name, and be another word between the name and the agency and the .gov. Bureau of Labor Statistics. Why is this here? Well, when you're doing your research on your business and you want to find out how much you should be charging or how much you should be making, this is probably the best undersourced resource you could probably use. Bureau of Labor Statistics, you can look up the most amazing things on there. We use it in the office all the time because we do business evaluations here. We do a lot of consultation for people buying business. It's absolutely invaluable for looking up in the area. So you can look up, say for instance, you're a photographer and you want to move to Michigan. How much does a photographer make in Michigan? How about in Battle Creek, Michigan? You can find out because they have all the statistics there. It's wonderful. The next website here, this is the IRS small business website. This is probably the best one if you have a lot of questions about deductions and what you could do, what you can't do. It's very simple. If you click on the link, it's not in IRS speak. It was written by the Taxpayer Advocate Office, so it's very easy to read. The next one is the portal for business for the state of Connecticut. That is a plethora of information. There's tons of stuff in there. It's all for businesses, self-employed people. They have all the forms. They have notices. They're very good at updating it, believe it or not. So it's usually the most up to date. Like if you have questions, for instance, about this tax-free week that's going on, click on there. It's all in there. They're really good at updating everything. And the most important thing is, if someone says that there's something, just make sure they are who they say they are. Look them up, look them up on their credentials. You always want to make sure you're dealing with someone who's licensed, especially when it comes to taxes. You want little letters after their name. You either want an EA or a CPA, especially when it comes to business planning. Same things with attorneys. It's a lot harder to lie about being an attorney because you can look them up on the State Bar Association. But people have been known to lie about having FINRA, especially FINRA licenses, especially when it comes to small business and scams. A couple of years ago, there was a very popular scam that happened in the New Haven area. Some guy was actually pretending to be a broker lender, and he wasn't. He actually had no license. And if you looked him up, he actually had 5 fraud convictions in California, but no one bothered to look him up on FINRA. So he ended up stealing about $40,000 from people. So it's one of those times that, you really should look and find, just look them up. It's the worst. So you're not being nosy, you're being vigilant. That's what you have to do when you're in small business. Okay, so if you have any questions, I'm not able to see the chat box, unfortunately, when I'm in here. So if I stop my screen sharing, I'll be able to see if there is any questions in there.
So there's only one more comment, I guess, from Jennifer. She says, I know a physician whose accountant told her she can deduct loans, and she continues to do so. I was like, what?
Well, you can if they're business related, but
no, student loans. That was in context of what you were talking about.
Student loans. Well, that's one of those very tricky areas of when she got the loan. It's one of those situation specific. Was she already doing something and then got the loan? Because then it's looked at as a career asset. But you can't have the loans prior to starting the business and then deduct that. It doesn't work that way. Have to be a continuing education kind of situation, and it's very situational dependent and fact dependent on when the loans were taken, for what degree and what they're doing now.
Really? So you're saying if you go back to school for your business and you take out loans, you can deduct those as a business expense?
Not necessarily. It depends. It depends. It's a very situation specific situation.
But if you can't deduct it, can you use your business account to pay for it, even if it's not a deduction?
Yeah, you can use your business account. You could use your business account if you're going, say, for a continuing education class. Like I have to go for a bunch of them.
Yeah.
But so for here, we take them as business expenses for the firm because we all have to do it. It's a requirement, right? So it's a business expense because it's something that requires, if Dr. Jennifer, if you have to go to say you have to attend a conference on something to update a license, then that's a business expense. There's a big difference between that and going back and deducting your student loans that you had previous for your bachelor's degree in, tree science when you're, doing a hairdressing job. It's very, like I said, it's very situational dependent. And it's one of those things that you have to really sit down with your tax preparer and go through the steps of the allotment, because it's only allotted in very certain situations. And what happens is a lot of people end up doing it because, as you know, the ability to take the interest for the student loan, the cutoff is pretty low for cutting you off at the income. So a lot of people try to get around it or view that it's a business expense. And then a lot of people get it confused with when they're getting divorced, because in a divorce, student loans, if it's used to do a higher end degree like a doctor or a lawyer, it's looked at as a marital asset. So those two lines get crossed lots of times, and that's what confuses people. But it's very situational dependent. It's something that you need to sit down with your tax preparer and you really need to talk about. It's one of those who, what, where, when, why situations in the context of the loans and the agreements. It's not something that's like a simple deduction, like, can I deduct my meal for my secretary? Yes, you can. It's called a diminished benefit. You can. It's not one of those simple yes or no questions, unfortunately. And it's one of those times that, it's I don't call it an open-ended question, but you have to, somewhat of personal details to go through in the timeline to see whether it's deductible or not. But most of the time, I will tell you it's not. And most of the time, it's disallowed on examination. So, unless it's something, like I said, that's a requirement, of you getting through. And this year too, the tuition and fees deduction came back. It was taken away during the Tax Cut and Job Act, but they retroactively put it back in. So that's a pretty big deduction for tuition and fees. I know in the past that helps a lot of people out, and that can be up to $4,000 as well. So that's something to think about too. And that's another area too that people also get confused because they're thinking, well, they're having the student loans, but they're taking the tuition and fee deduction. So it can get crossed lots of times with the understanding of what's with education, what's allowed and what's not. I can tell you another problem with student loans is people will take student loans out. Say, for instance, a child will have a student loan and the parent will be paying it, and the parent thinks that they can take the interest and they can't. Your name has to be on it. You have to be basically on the hook for the loan in order to be able to take it. So if you're paying your boyfriend's student loan out of the goodness of your heart, it's his deduction, not yours, because they don't care who's paying it, it's whose name it's in. So that's another problem with student loans too.
Wow, that's a lot.
Unfortunately, I mean, and I hate this, but that's the way, like I said, the tax laws, you absolutely can't do this unless this or this or this or this. So you have to kind of go through and work your way through. But most of the times I could tell you that it's not allowable, but there are times, and it's usually in professions like yourself or with lawyers or for people with advanced financial degrees that comes into play. And there's only very rare instances that you can continue to take it. And it comes down to what the loan was for, when you did it, if you were already working. There's a lot of questions that come into what kind of business structure you have. There's a lot of factors that play into it, unfortunately.
What about using your business to invest in your retirement?
Well,
like in a IRA?
You have to, if you have no employees, you're fine. If you have employees, you need guidance.
It has to be the same.
So if you have no employees, you're fine. If it's just you, if you're a sole practitioner, my advice is, I always say that, that good little team you're going to have with your insurance agent and your, accountant and an attorney or a legal service person you're going to use. Make sure you get a good banker in there or someone that you trust or someone that works for a bank and that specializes in, self-employed and small business, because not every banker does self-employed and small business. And then sit down and have a meeting with them. And that's another thing when you're looking for professionals, please don't ever pay for a consultation. I mean, for crying out loud, no one, people tell me they charge. It completely blows my mind, and people tell me a lot. If you're meeting with a professional, they shouldn't be charging you a consultation fee. It's not normal, especially in the legal and accounting world. So they shouldn't be charging you a consultation for the fee, a fee for a consultation. And the same thing for a bank or a broker or anyone you're going to use for your retirement. Actually investing in your retirement when you're self-employed is a very good tax planning angle. So it's good to talk about with your tax preparer what you could do, because you could do a SEP IRA and you're allowed to do up to 20% of a certain amount. So at the end, and you're allowed, don't forget, to April 15th, or if you on extension to October 15th of the following year to contribute. So sometimes what can happen is you can go in and get your taxes done, and they'll be like, hey, you're going to owe money in taxes, but you can contribute X amount to your retirement, and then you'll only owe this. So sometimes people rather pay into their retirement than pay the government. But that's something that usually if you have your tax preparer at the end of the year, you can either call them up in November. Like I call all my clients in October and November before December. We try to get them planned out. But even still, if you know where you are in January, say, listen, I'm looking at $30,000 in profit I'm going to pay taxes on. What are some strategies I could do to get my tax down? If you're self-employed with no employees, they're going to tell you that do with a SEP IRA but just keep in mind when you are saving for your retirement, it's very important for you to have that taxable and non-taxable basket, right? So you want to make sure that you're contributing to the Roth whenever you can, because that's going to be tax-free distributions for you later. So you want to make sure you have that basket to grab from that's not taxable and that basket that is taxable when you're saving. And it's never too early to start. I just read an article this morning. It costs $1.3 million to retire in the state of Connecticut, on average, from the time you're 65 to the time you die in the state of Connecticut. It's $1.3 million. That's how much money you need saved to live in Connecticut. We're like the second in the nation.
And I just met with my financial advisor last week, I think, and he said pretty much the same thing.
Yeah.
Wow. Just $1 million off the top.
Move to Arizona. Even Florida is actually kind of high. People don't realize that they're like the 8th or 9th highest, but yeah, they're pretty high too. Just the But yeah, $1.3 million. No, but if you don't, and when you have employees, you need a lot more guidance because you're underneath a lot more rules. When you don't have employees, you're just by yourself, or if it's just you and your spouse, it's a little different. It's a little different.
Okay.
Okay, any other questions while we're still here?
You can unmute yourself or put yourself in the chat. Unless we covered everything. We covered a lot.
It's a lot of information. I know.
Yeah.
It was a lot of information, but it was very good. And also,
Fantastic. Yeah.
if you want to go back and check it out, it will be on the library's Facebook and YouTube pages. So you can have it as a reference.
Are you, hi, this is Letitia. Are you guys going to send us the PowerPoint also? Or do we have to go get it?
You got to go get it.
Oh, yeah, we've never sent the PowerPoint before. It's just been part of the video component.
But will we be able to access the actual, like download the PowerPoint or just rewatch the video?
Usually you would have to rewatch the video because it's part of the
Is it the
experience.
links? Is it the
like this sheet right here.
I could copy the links and maybe I can send it to Sammy and then Sammy could
Okay.
post the links.
Okay.
Yeah, so that way you can do kind of the one click and then we'll just click and work. Because I actually
Perfect.
and pasted the exact links so that way everyone went to the right spot and we weren't Googling.
Okay.
Yeah, that would
So
be
I'm gonna be sending out a project outcome survey to see how this went for everyone, and so I'll include the links on that.
Great, thank you.
You were saying something, Jennifer?
No, I just said that would be great because I just screenshot it because I
Oh.
wanted to use the resources later, so I wasn't sure what was going to be sent out.
I gotcha. Yeah, no, that's a great idea.
Yeah, I always say if you like to read stuff and you're nerdy, be careful of that Bureau of Labor Statistics. It's like Facebook. You're following there, you'll be on there.
Yeah, I'm gonna love that one. I know.
Yeah.
That's funny.
I love that one. I use that for the business plan writing. So people
Yeah.
think that there's not information out there about different jobs, industries, market analysis and stuff, and it's all there.
Yeah.
We use it a ton here, a ton. We use it a lot. It's probably one of the best free resources besides the IRS small business website for a small business. The IRS small business website, I say it's almost like I call it tax accountant to go because like anything you could read, it's easy to read. It's broken down and like it's not an accountant speak. I wouldn't put
Good.
it,
I'm going to use that one because I don't speak accounting at all.